The Hedgeless Horseman here, it's February the 6th, 2023. Kind of a swingy market day so far. Stocks down, then less down. Interesting part I think is dollar is ramping pretty good. Was up 0.8% actually earlier today. Well, it's not far off from that right now. Still, it's like gold is hanging in there. Actually was up at around 1892 apparently earlier today, or during the night I guess. Silver is taking a bit of a beating, copper a bit of a beating, but I mean in the old times, let's say if dollar was up 0.8%, you could see gold and silver down like 2-3%. So I'm kind of surprised by that actually, especially since gold has put out some really nasty candles. Well, two at least. I mean, that's a pretty fat red candle, followed by a even fatter red candle. But again, I don't try to guess where gold is going. I had no idea that we would make a triple bottom down here and then go up for months on end. I had no idea where this was going to top. The only thing we know, and I keep talking about this, is that the longer in a downtrend, the closer you are to the next uptrend, and vice versa. It's like one shouldn't be surprised that we get a correction after a rally like this. And that, a downtrend sooner or later turns into an uptrend. I mean, this was, again, pretty remarkable. Like 3 times they try to get the price below, I guess, 1620 or something. Just remarkable. And it actually held. And all of a sudden, it's like, I guess when people realize, hey, it's not going lower. That means, path of least resistance is up. And then, shoom. But I bet you a lot of money that almost everyone was expecting this to fail here and go lower. I remember everybody was talking about $1450 gold or something like that. But I just, again, everybody's trying to guess all the time. Where I've seen, polls lately, it's like, where is gold going? And you can guess like 1850, 1750, whatever. I have one job. Find something that is cheap. Hold it until I find something that is either cheaper and or it's not cheap anymore. That's the only calculation I'm making. I don't care what gold looks on a daily basis or silver or whatever, because if you own something that is really cheap here, it's probably still going to be really cheap here. It might be really cheap down here even. I mean, some of these gold juniors especially are like ridiculously bombed out. I mean, we saw higher valuations in the junior space when gold was at like 1350, and sure, I mean they're not far off. Some valuations not far off from what you would see down here. And sure, back here obviously gold was a lot lower, but now inflation has gone up a lot. So it's not like, I mean, if we had the cost structure down, now that we have back here, I mean, the margins would be pretty insane. I mean, costs have crept up, but still, I mean, it's not like the gold miners are losing a bunch of money. I mean, back here, nobody was making any money, and companies were going bankrupt, and they had a lot of debt, and basically no gold mine on earth was actually profitable at this point in time. Now there's a bunch of gold mines that actually make money, so it makes no sense why the gold units should not reflect the fundamentals of the gold sector. And sure, I mean, they were even better back here when cost inflation wasn't as bad as now, but it's still, it's not a worthless business, even though Mr. Market suggests as much right now. And it's like pretty interesting. Newmont made a bid for Newcrest of 16.9 billion. It's like, okay, that makes sense. I mean, they have a bunch of operating mines, a lot of sunk costs, and they have a really nice growth profile. So it's like it's understandable why you would pay up for that, because again, I mean, banked success is cheap. I mean, it's hard enough to get one mine in production today in a tier 1 jurisdiction. I mean, Newcrest has a bunch of mines, and some of them could be mines for decades, like Cadia, for example. And I guess, I mean, I think they're ramping up here. They have, what's that other mine, for example? Well, they have Bruce Jack. They have, what's that copper gold mine in British Columbia? Red Chris, which I think they're doing, working into a block cave. So that's probably going to get better with time. I saw a chart of their growth profile. I don't have it ready right now, but it's like, yeah, in a few years it's, going to pick up, let's say. And KD is one of the largest mines in the world. It's pretty ridiculous when you think about it. That it's only 16.9 billion when you think about the value and how much it would cost to get those projects into production today. And you get a bunch of mines in different jurisdictions. So it's like, yeah, I understand that it's cheaper for Newmont to buy ounces today than to drill up and put them in production. Which just highlights that it's like, yes, sunk costs are ridiculously cheap right now. And hence why I prefer to go the sunk cost route right now. Beta with alpha. Meanwhile, at a sentiment high, you might go more alpha, for example, because there's not much upside unless you can grow something. But it's just ridiculous how cheap this sector still is, and it's been cheap for almost 2 years, I would say. I mean, it's gotten increasingly cheaper, of course. And this is well, that's not GDXJ. This is GDXJ, and I see people trying to guess where is this going to go. It's like I absolutely have no idea. I have no idea if it's going to turn around here, or whatever. Again, that's not my job. Everybody else is trying to guess every single day based on what is happening on every single day. If this is a top, that means that miners are probably going to go down in price in the short term. It's like the idea of hey, a company is either overvalued or undervalued. It's not going to be under or overvalued based on how the chart looks. So that's why I think most people just, they don't really have a strategy. They basically buy when they think it's going to go up in the short term, and they sell if it's going to go down in the short term, because theoretically that would be perfect. You would have a constant, if you're only in stuff that's going up in the short term, you would have a constant move higher. So it's understandable. It's a fool's errand, basically. There's so few people who actually make any material money, especially in size, I would say, by trading. That's just my opinion, and I don't like to take that risk. I hate losing money if I don't think if I'm playing against the house, let's say. When I buy something cheap, I know I'm not making a mistake by default. But if, in terms of guessing where something's going to trade tomorrow, I mean, I'm not a good trader to start with. It's just incredibly hard and stressful, etc. I have cheap stuff. It's like I've shown my portfolio, my concentrated portfolio, my hodl portfolios. They have ups and downs. It's just that the trend is up. And that's with no market timing at all. Just value shuffling. Let's say something goes up 50% for really no reason, and you have 9 other stocks that were equally as cheap to begin with, and again 1 out of 10 goes up 50% for no real reason. All of a sudden, okay, you get some paper profits. you can convert that to future paper profits in that case by shuffling into something that is even cheaper. It's like you again using volatility in your favor, because almost nobody actually cares what something is worth. Everybody just wants to own something that goes up in price. Some news: Dolly Warden put out even more stellar news. 15.94 meters, that's drill width, averaging 1,500 grams per ton silver, including 0.35 meters, so 24 kilograms silver at the Wolf deposit. That's one of their 7 deposits. That's not even where the last barn burner hole came from, or the last headline hole. And if we look at the, use the core box calculator here, because like with the first hole, people assume that it's only this 0.35 meter intercept that's actually, might be of value, because typically when holes have this is ultra bonanza, and they, quote, smear it over a larger interval, typically one can see that if one removes this grade in this narrow intercept, sometimes it's like sub-economic grades that are left. But this is again the second absurdly good hole that shows that, hey, what's left indicative is 994 grams per ton silver. So that's bonanza grade as well. This is ultra bonanza within a bonanza, thick bonanza intercept. So really, really good results. I think that was up, what is that, 30. I think that's, no wait, is that, 29. So that's, that's this hole here. So it's open in this direction, You can see the stuff they're hitting here. It's like these are not small step outs, and they are even hitting down here, which might be a completely new vein. And that's only from the Wolf deposit. And they're finding better stuff than they thought at the Kitsault deposit. So it's like, Dolly Warden, they have all the cash they need to just keep on drilling. Hecla is a shareholder, as we know. The chart looks to be on the cusp of a major breakout. And I wouldn't be surprised to see Dolly Warden be acquired within the next 12 to 24 months. Because there's, again, you don't find many silver, there are not many silver projects out there which has this kind of margin of safety already, and this kind of upside potential in British Columbia. And you already have Hecla as a shareholder. It's like, they bought in before they had hits like this, and they've been a shareholder for quite some time, and they actually tried to buy Dolly Warden a few years back. And now obviously Dolly Warden is much larger, since they consolidated their ground with the Homestake deposit. I should have said it. The last barn burner hole was from the Homestake main, not the Kitsault. Kitsault is the project, pretty much. So again, in my opinion, this is one of the best silver hodl stores you could ask for. It's like they're gonna keep on drilling. The value is probably gonna go even higher. And if silver sentiment turns around, or I should say when it turns around, there won't be many advanced. There are not many advanced silver juniors that has a major investor already in a tier 1 jurisdiction. There aren't many, if anyone at all, actually. Well, there's probably some, but it's like, if you like silver, if you like growth, I don't think you can go wrong with Dolly Warden. It's like you have the third-party validation from Hecla and Sprott, and they have a bunch of cash. Sean is a great CEO. He typically is very good at making deals, etc. So yeah, it's like this is one of the lower risk because you're never gonna end up in a silver bull without any silver. In the case of Dolly Warden, is it like nosebleed cheap? No, maybe not nosebleed cheap, but it's like, yeah, there's a reason why it has. I don't remember what the actual market cap is right now, but let's say, what is it, 240 million perhaps? Yeah. Anyway, it's like, yeah, it deserves to be worth something because it's quite unique, let's say. So yeah, I mean, if you give these guys 2 years, maybe they found a lot more silver, and this would be like, yeah, no, you know, hands down the one of the best silver projects around that is not in the hands of a mid-tier or major, let's say. So I would be surprised if in 2 years, you know, the share price of Dolly Warden is not potentially materially higher than now. And again, what's the margin of safety? The silver they've already found, and the gold is not going anywhere. And you don't find many of you know, projects like this around the world. So yeah, again, regardless of what silver trades at or gold, let's say tier 3, tier 2 projects, they're gonna stay tier 3, tier 2, and with the grades they have, I mean, who knows, maybe this could actually produce positive cash flow once up in operation. You know, I wouldn't say regardless of what the price of silver is doing, but it's like, yeah, this could probably be a pretty high margin operation. I mean, obviously if you mine this kind of stuff, it's like won't matter what the silver price is. So that's always a good thing, because typically also majors or larger mining companies, they I mean, everybody appreciates margins because that can save their assets in a poor market environment and can actually allow them to buy stuff when other people are need to sell. It's like we saw what happened with Fosterville Mine, allowed Kirkland Lake to you know, buy Detour, for example, and then Kirkland Lake got bought out. Anyway, I also want to touch on, just, you know, to show what sentiment does. Not only sentiment, it's like take Brunswick exploration, which is one of the absolutely hottest stories out there. And the funny part is about Brunswick is that I don't think they have drilled a single hole yet. So it has a market cap of 160. Well, recently it hit, what did it hit today? Over 1.03. Okay, so let's say it hit $180 million market cap today, before they have even drilled a single hole. Now think about that. Not a deposit, not a single hole drilled. 170 or 180 million market cap. Without having anything, no, not even a 0.1 or 1% of a bird in the hand. Why? I mean, they have. It seems to be a very legit story. They have amassed an incredibly large land package, and it's like up until at least 52 cents, insiders were buying like crazy. They haven't bought. I mean, it's up almost a. Yeah, it basically hit 100% return since insiders piled in. They haven't piled in recently. So it's like, I'm not aboard the lithium train really. I have some stocks that have lithium. I'm not an expert on lithium. I don't know what I'm buying. I mean, it seems that I've been pitched the story of Brunswick, so it seems like it's a legit. They have a legit strategy. I mean, they have a bunch of targets, and they hope to find something that is valuable. And lithium right now has been very valuable, or is very valuable. There are some absurd economic studies out there. And it's like, obviously it gets, I mean, the Patriot battery metals success has rubbed off on Brunswick for sure. I mean, that's over, I don't know how many is there. I mean, that's a 30 bagger. Patriot battery metals has made a legit large lithium discovery. It's 30 bagged in a year, which is, again, if you find one of those and you kind of write it out, I mean, who knows how many I wouldn't say mistakes, but like cases that haven't played out well, at least yet, by just if you only had, for example, Patriot battery metals. And that's the idea. It's like you don't need anywhere near 100% hit rate, and that's what, drives me up a wall when you see people like point fingers like, haha, you were bullish this story or that story and it's done crap. It's like, yeah, first of all, if it's gold or silver or even copper, typically, yeah, sentiment isn't here. It's obvious that sentiment is really hot in the lithium space. You don't get 180 million market cap pre any drill hole if sentiment is not hot. I mean, this is valued more than many multi-million ounce gold and silver deposits, etc. I mean, I remember in 2017 when junior sentiment was hot. Gary Baldwin, I've talked about them a bunch of times. They were drilling for nickel up in British Columbia. It reached a market cap of, I think, around 400, maybe even 500 million before a single assay was out. That was an insanely hot market sentiment. It was in the wake of the 2016 junior rally, which was, I think, the best quarterly rally in juniors or minors overall in maybe forever. So sentiment was extremely hot. People were thinking more about how much money they can make than how much more money they can lose. So everybody was looking for an excuse to buy. And obviously if Patriot battery metals wasn't around, you would not see a market cap like this before a single drill hole is out. Because now people have a reference point. They see what happened to Patriot battery metals, lithium in Canada. And Brunswick has ground, I think, pretty close to Patriot battery metals. So it makes perfect sense from that standpoint why people can, project how much money they're going to make, because they have a perfect example of a 30 bagger in a year. As for me, I have missed the train on Brunswick. I missed the train on Patriot battery metals simply because I'm not very familiar with lithium. So it's like when Warren Buffett gets asked, okay, if, about circle of competence. If you even have to ask if it's within your circle of competence, it's probably not. I know lithium is not in my circle of competence. I have no idea what the upside potential is for Patriot battery metals from $1.63 billion. I don't know what's going to happen with Brunswick exploration. It might 10 bag from this market cap and reach Patriot battery metals kind of valuation. Who knows? I just know that the lithium sector is very hot. There's a bunch of juniors for kind of understandable reasons who are switching to lithium. The thing is, I would say, with like lithium, etc., is that apparently it's not even that rare. I mean, a great deposit in any metal, etc., is rare, I mean, by definition. And from what I've heard, Patriot battery metals, the Corvette deposit, I mean, that looks like I guess a tier 1 deposit in the lithium space, I think. But still, it's like 1.63 billion. Can that go high? Sure. But it's like, who knows what's going to happen with the lithium price? Since it seems that everybody's now out looking for lithium, there's a bunch of deals being made, and apparently it's not too hard to find lithium. Especially, I mean, relative to other metals. So if lithium is not even rare, and now it's extremely valuable, I mean, you can just think about how much supply is gonna, I mean, demand is gonna go up, or it's going up right now. That's why lithium prices are high. But everybody's scrambling right now to put, lithium into production and find lithium. And if it's not even that hard, I mean, I wouldn't want to be in this sector when the music stops, let's say, in the lithium space. And that might not be for years. I don't know. But if I can't see that it's, obviously cheap, like, yeah, this is easily should go up 100% more or whatever, then I'm not too interested. It's like Brunswick exploration. They might find nothing. The odds are they will find something, but okay, they must find something that is worth a lot more than 165 million. And at that point, obviously, lithium prices can't be too low. So it's like, how is the risk reward? Obviously, everybody loves this stock because it's going up. It's like, as I like think of it, like, okay, Brunswick doesn't have a single drill hole yet. Magna Mining has 2 permitted nickel projects, which is a lot harder to find than lithium. And sure, lithium might have even higher demand projection, but it's probably many times harder to actually find one good nickel project. They have 2 permitted, and one is a Sudbury type deposit, which were so good that they've been mined for hundreds of years. So it's like, in my book, there is no question that let's say, if you forgot about the hype premium put on lithium, and just risk reward, what is there is no margin of safety in Brunswick, obviously, except for a statistical approach that they probably are going to find something at some point in time, but that is certainly no guarantee. We already know that Magna has 50 million tons of nickel copper PGMs across 2 projects with exploration upside, cashed up, and could be in production in let's say 12 months. And you can buy them at the same price. I mean, to me, that's why I don't own any Brunswick, for example, and I don't know how I could from a risk reward perspective, I don't know how I could, let's say, put any money in Brunswick over Magna, because I don't even have any margin of safety in Brunswick. But yes, there's kind of a diversified upside, and by definition then diversified downside protection by the fact that they have so many targets. But that is still a statistical diversification, and we have no idea if they're going to hit on the first target or the 10th. Magna doesn't need to drill anything more than to be, it should go up, let's say 200% at least, just based on what is already there. You can't say the same thing about Brunswick, that it should have a market cap of like $480 million based on what they have right now. You cannot say that. And Patriot, and obviously, they are, since they don't even have a single drill hole, they are years away from a deposit, and obviously they're many years away from production. And I don't know when Patriot Battery Metals would be in production, but this looks like a lake. I don't know how cheap, etc. This is a critical mineral, so it's like, yeah, the powers that be want to get lithium up and running, but it's like, I would guess this wouldn't be too cheap to get into production if they have to, drain a lake. I'm not 100% sure it is a lake. It looks like a lake. And obviously I don't know much about Patriot Battery Metals, so it's like, maybe Patriot Battery Metals is super cheap. I'm just saying my, my biased, hot take, let's say. It's just that I have a hard time seeing that this is worth, let's say, 10 times of 2 nickel mines in Sudbury. I just cannot see that. Permitted deposits with exploration potential as well. This is obviously probably years away from being into production, and I don't know how much money they would need to spend, and we don't know what the lithium prices are going to be at that point in time either. So that's my simple reason, but it's like market doesn't care what I think, obviously. I mean, I know insiders, stopped buying, 100% ago. But that is obviously not stopping 3 million shares from being bought today. But that is not the game I play. I don't play the buy what is hot and what's going to go up tomorrow. I want to be, I typically now especially, I want the risk reward to be great. I want to know that I'm buying something that is worth a lot more. And then compare to other cases. So it's like, personally, I don't think Patriot Battery Metals deserves to have a 10 times the valuation of Magna Mining. Especially when you factor in the, margin of safety, let's say. Because, okay, I can have an idea of what cash flow Magna could put out. I doubt Patriot Battery Metals could put out 10 times that cash flow. Maybe it could, maybe it actually could. But that would still be years from now. And again, long term, I'm not that bullish on lithium. Because it seems that it's like, if it's not that hard to find, and everybody's scrambling, and there's talk about sodium replacing some of it at least. I simply have no idea to okay, what's the long-term fair price for lithium? I just know that finding nickel deposits is very hard. That is very, very hard. And it's like another way to look at it. Brixton, for example. I mean, Brixton right now has 4 projects. 1 copper porphyry discovery, 1 gold discovery that looks to be probably going to be, I think, at the end of the day, at least 3 million ounces, maybe a lot higher given the scale of the rock chip sample trend, etc., and soil sampling, etc., etc. I mean, it's basically a 14-kilometer long trend or something. Yes, it's remote and all that, but you get 4 projects. Third one, Hog Heaven, is a earning by Ivanhoe Electric, which is a $1.6 billion company, and we know that Robert Friedland typically only hunts elephants. And they have Langis, which is they actually have 4 projects. They have Langis, Hudson as well, which is a silver cobalt project, which they hit pretty good cobalt, and ultra bonanza silver stuff. I mean, I wouldn't put too much value on that. And they also have the Atlin Goldfields, which another junior is earning into. But they have 4 projects, and one is earning with Ivanhoe Electric, which is an elephant hunter, the exploration arm of a major, and they have BHP as an investor based on their Camp Creek discovery. Brunswick, which does not have a single hole, and obviously not a discovery in that case, has twice the market cap of Brixton Metals, which has at least 2, potentially, 1 BHP type, BHP size discovery. In BHP has a 250 billion market cap, and they have a good looking gold target, which is incrementally hiking up the margin of safety, and they have 3 other projects on top of that. Does that make sense? I mean, people say the market is always right, and Brunswick could 10 bag from here. But from a risk-reward perspective, I mean, it's obvious that, not that much has changed, and it's still up 100% since, insiders. I mean, that was only a month ago when last time they bought. It's up 100%. Did they create 100% in value? Has lithium prices gone up that much? I don't think so. And the same was for Garibaldi. It was so incredibly. Everybody was dreaming about a new Voisey's Bay, or even larger, a new, what was it called in Russia? I don't remember. I don't remember what it's called. But even larger than Voisey's Bay. But it's like, you have BHP. You have already a discovery. You have a gold discovery as well. You have we could call Hog Heaven a discovery because it already has a small resource and all of that. So it's like, and that's why Friedland is there. So one could say you have 3 discoveries, one BHP sized, and it's trading for half of what a lithium junior with not even one discovery yet is trading at. Brixton is high risk, high reward, but what is Brunswick in that case, and how does it compare to the risk reward? The relative risk reward. I would take Brixton Metals hands down, which is the reason why I own the stock. But it's like, again, I can't say, and obviously Magna, but I can't say that Patriot Better Metals, this might multi-bag again. Trust me, I have absolutely no idea, so don't take this as a sell, because I don't know enough of the story. And I certainly don't know where lithium prices are going to go, or how long it could take to take this into production, or how difficult that would be, yada yada. Maybe Patriot Better Metals is going to be sold for 10 billion. I really have no idea. Maybe Brunswick makes not one discovery, but multiple discoveries, and it becomes a Patriot Better Metals. I have absolutely no idea. I just know that, in my opinion, Brixton is becoming very cheap for what I would say obvious reasons, and why Magna is just a absolute no-brainer. Those are no-brainers to me. I understand the risk reward in those. I have no idea what the risk reward is in Brunswick is. I know that they don't have a discovery yet. That's pretty much it. And I know it's very, very hot. So it's like, if it goes up 100% on the project, they staked more land and it's up 100%. You have juniors in the gold, copper, etc. space that have made discoveries, like Pacific Ridge, 2 copper gold discoveries in British Columbia. They have a market cap of 26 million, with I think like 7 million cash. 2 discoveries. This has no discovery and it's already up, and was up at 180. You can make a lot of money in this sector, that's for sure. But I think that, again, this market is totally irrationally priced at different points in time. It can either be what I think is, let's say, stretched with not perhaps the best risk reward, and there are cases where sentiment is bad, so the risk reward is obscenely good. So I just thought that was a good topic, actually, because I've seen what happens in hot sectors. I've seen what can happen with hot stocks, and also it's like to be, I have missed the train completely on Brunswick and Patriot Better Metals. And again, this is not a you should sell, because I have no idea. I don't know the cases well enough. I don't know what the actual risk reward is, and I certainly don't know what's going to happen. Brunswick might make 0 discoveries or 20 discoveries. I don't know. It's just, again, all we can do at any point in time is to make, in my opinion, I mean, my perspective, the risk reward and like value investor or value speculator, is to make the best decisions we possibly can in light of what the price we're paying for something, market cap, enterprise value, and the possible scenarios that might unfold. And I just have a very hard time that from a risk reward perspective, let's say that Patriot Battery Metals would be 10 times better than Magna, or that Brunswick would be equally as good as Magna, without even knowing the stories very well. I just have a very hard time seeing that. Or maybe they are fairly valued, but like Magna is just obscenely cheap. Or Magna is, cheap, and these other ones might be expensive. But just, again, all you can do is make the most rational decision at any point in time, because nobody knows the future. We only see what we pay to play, and then we have to, except if you're a trader. I mean, if you're a momentum trader, you're probably all over this, and hopefully you'll know when to, let's say, sell. I'm not very comfortable with playing that game, theoretically the greater fool game. This is just, very hot. And of course I would have wanted to be a part of this, and especially I would have wanted to be a part of Patriot Battery Metals. But I don't need to be on board. I'm going to miss 99% of all 10 baggers, if not more. That it's not required to be a part of every single story. And we have no idea what people... I mean, the only thing that matters is our long-term portfolio results. If I can find, and I've said this a bunch of times before, my goal is to compound at 50% per year over the long term. Because in the end, if you are able to do that, you are going to have a lot of money in 10 years, almost regardless how much you start off with. I am not banking on finding the one stock that becomes a 30 bagger in a year, because typically, I mean, there's a fair amount of luck, obviously, that just goes with the territory. And again, if you, let's say, if you have a 1% position, that becomes a 15% position at 15 bags. If you have a 15% position is in a much higher conviction play, let's say lower risk, and that goes up one time or doubles, that's also 15% to your portfolio. So I dare say there's probably not a bunch of people who have got in with a huge position and did not sell any. I mean, think about it. If you bought a 1% position in Patriot Battery Metals and you actually held all the way through this and you 30 bagged your money, that's a great return. That adds 30% to your portfolio. But you can have gotten those kind of returns if you had 3 stocks then that went up 30% over the same period. I simply have a hard time to, there's probably not many people who went all in and held all this way through. I mean, and let's face it, I mean, if you have started off with a 1% position and you sold half on a double, in reality you would have a 15 bagger from, you know, invested capital, not a 30 bagger. So don't go FOMOing just yet into every high performer or get too jealous, etc. You have no idea how people's portfolios actually have done. You have no idea how much. I mean, I have some multi-baggers still in my portfolio, which is like a tiny amount today. Some I bought, I think, like 4 years ago. And I just kept a part of the position for fun, just to keep track. And I think some was like a 6-bagger at least. But I had almost nothing after it had gone up like 100% or something. So yes, one could say, yeah, you know, you bought something that's 6-bagged. But I had so little left that in reality it just became maybe a, let's say you got 80%, because the last 500% you almost had nothing left. So I guess the takeaway is that don't get too jealous. Other people's portfolio returns has nothing to do with you. You don't need to be a part of a 30-bagger to have very good long-term results. Even if you had no stake in Patriot Battery Metals or any other junior that has done very well, that does not mean you can't have really good long-term results. That's just how it is. So it's like, chill out. Don't go FOMOing. Don't be too hard on yourself if you miss, you know, a 10-bagger or even a 30-bagger. I didn't catch Great Bear either. I sold that at I think 25 cents. Was going to get in at $2.6 or something. It bottomed that time at $2.7, so I never got in. That's okay. Again, that's okay. If you can just find stories that you think might double every 2 years, or which is like, I think that's like 42% per year, and you know, high conviction stories, margin of safety, and you just have the bulk of your money in, you know, again, probable growth or cheap stocks with some growth, etc. If you can average 42% per year, you're gonna make a lot of money. You don't, for sure, don't need Patriot Battery Metals or you know, being at from the lows in Snowline or anything like that. You could make very good returns. It's like with Brixton. I mean, if this turns out to be let's say, you know, Camp Creek really delivers next year, and it's like, okay, now we understand why BHP got interested. I mean, you can imagine the runway left for Brixton Metals, but you don't need to be, you know, super deep in Brixton Metals because of that. It's like, I mean, let's say if you had a 10% position in a high risk, high reward story like this, and let's say it becomes a 20-bagger. I mean, who could stomach riding 10%, starting off at 10% and it became a 20-bagger? You would have 99% of your portfolio in Brixton. Nobody's gonna do that, I think. Again, it's like, if you can get 50% per year or 40% or 30% per year over the long term, that's gonna be a lot of money. And I can promise you that everybody that is on board of Brunswick or Patriot or any other great success story. I mean, again, Gary Baldy ran up to 500 million before a single drill hole, and now it's I can't even see the it ran up to $4.65 in 2017. Now it's at 25.5 cents. It started from 15 cents all the way to, yeah, before a single assay was out, I think. So that's also a 30 bagger. Approximately. So if you saw that and somebody held that to the high or whatever, it's like, yeah, okay, they must be crushing it, etc. I mean, they were taking obscene risk if they held on to a 30 bagger before a single drill hole was out. So just because somebody is like, you know, has a 30 bagger or 10 bagger or 20, doesn't mean they're a good investor. Anybody can literally have I mean, Jesus, from the lows, any nano cap or micro cap typically became a 5 to 10 bagger. It's the long-term results that make sense. I mean, it's not really a strategy to, yeah, I'm just going to look for the biggest hype trains ever, and I'm going to sit put for a 30 bagger. And then, okay, they didn't really make a big nickel discovery, and it's down like 95% or whatever. It's like, that is not really a strategy. It was not a cheap play when it hit here. But again, if they made a discovery, if they found Voices Bay, it would have multi-bagged. So you can't say at the same time in hindsight that it was a, you know, oh, it was so obviously, or I mean, I owned a bit of Gary Ball, but I think I sold it like $1 or something. That it was getting too rich for me at $1. It went to 4.65. But that's not the game I play. I remember selling First Majestic in 2016 when it went up to, I don't know, $5. I think it went to 18. But it just became expensive relative to other stuff at $5, I think, to me. But that made me miss, you know, a 2-3 bagger from that point. But that has been okay. First Majestic has gone down a lot since it got very overvalued at that point. And that's, again, totally okay. You don't need a bunch of multi-baggers. If you can find doublers over 2 years, you're gonna make a lot of money. Trust me, 42% compounding, that's superb. So, yeah, again, it's like be rationally greedy, at all times rationally greedy. Think about the risk reward, and remember that for everyone that's hunting a 10 to 30 bagger, I mean, most will never become that. So you can just imagine how many, if you are deep into a very high risk, high reward play that works out, typically you're going to keep making those bets or have made those bets before. Maybe some people who are in, who were in from this, you know, early days in Garibaldi or Patriot or what's that? Brunswick, maybe they started down 70% in their portfolio and they bought a 5% position or whatever. You never know. It's like you just never know. But the thing is, the key is to find a strategy which you follow at all times. Just saying, hey, I want the next 10 bagger. I mean, that's not really a strategy. Obviously, everybody wants that, but that's not even required. If you can just find, you know, probable doublers every 2 years, you're gonna beat almost everybody. So it's like you have to be aware of that. And again, Patriot Battery Metals might be a multi-bagger from these levels. I don't know. I just know that I think Magna Mining should become a multi-bagger from these levels. And I personally would, regardless of what metal we're talking about, I would much rather own 2 permitted mines for the same price or over, paying a similar amount for an exploration story with not a single assay out. And it's just on that note, it's like, okay, what is Brunswick after? They're after something that Patriot Battery Metals has, obviously. It's like, yeah, they have a bunch of targets, and the odds are that some target is going to hit. Okay, who else has that kind of strategy? Inflection Resources. It recently had a market cap of, I don't know, 6 million? Maybe 6-7 million. They're hunting for major porphyry discoveries. They have a bunch of ex-BHP guys on the technical team. So you can just imagine what kind of price they're looking for. And they have kind of the same approach. They have a huge land package. In Australia, okay, they have a harder time, I would say, testing their targets. But copper porphyries are much rarer as well than, lithium plays. So does that make sense? That's like Brunswick, okay, what's their strategy? Stake a bunch of land. Odds are they're going to make a discovery at, let's say, on balance of probabilities, at least one discovery. Yeah, I would say that's the strategy that Inflection Resources has. But it's over 90% cheaper. Does that make total sense? I wouldn't say so. We know what Cadia is worth. That's a multi-billion-dollar system. We know what North Parks and Koval are worth. I mean, that's billion-dollar stuff. Kind of like, Patriot Battery Metal stuff. And I'm personally more bullish on copper than I am on lithium over the long term. So it's like, yeah, they have kind of the same approach as Inflection Resources and Brunswick. And one is trading at 165 million and one is trading at 13.6. Does that make sense? Does Brunswick have, let's say, 10x the chance of success to find, or to find something equally valuable that Inflection could find? Maybe. I just doubt it. So again, it's like, if this market is so hard to beat, that must mean it's, in my opinion, by definition would mean it's super rational. I don't find these valuation differences super rational. I don't find Brunswick trading for twice the market cap of Brixton as I don't find that rational. I don't find Brunswick trading on par with Magna Mining as rational. But there's still 3.17 million buys today. But that's just my 2 cents. Long rant, and again, it's like, this is not a. I'm not saying sell Patriot or Brunswick. I don't know enough about those cases. I'm just outlining some. Let's say some. Let's pretend. Assume I am a bitter person who missed the boat, and do your own due diligence. This is just how I think without knowing too much, but just comparing the hype and knowing what the hype premium can do. So again, just my 2 cents. I don't share your gains or losses. So obviously, since I haven't been a part of Brunswick or Patriot Battery Metals, if you have been, you have done better than me in those stocks, because I have gained nothing from that. I'm just trying to, again, stick to my strategy and have it deployed at all times. Always try to stick to the risk reward. And that often means buying stuff that gets cheaper and selling stuff that might become a multi-bagger after I've sold, or become a multi-bagger after I've not even bought. That comes with the territory. It's the long-term portfolio returns that matter. Never forget about that. And always keep in mind that if you can just find probable doublers every 24 months on average, you're gonna end up doing very, 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 very well, and better than 99% of people. You don't need to constantly be looking at things that might become a 30-bagger in a year. Because as you know, that is so extremely rare, and nobody knows which one it's gonna be. I find it a lot easier to find companies that I think has a very good shot of at least doubling within 24 months. Yeah, the end of the rant. Hope you got something out of it, and if you have made money on Patriot Battery Metals and Brunswick, congratulations. Nice win. And yeah, just don't forget, I would say, it's like, keep the risk reward in mind. If you're a value investor, I mean, if you're a trader, etc., or have another strategy, you shouldn't listen to me. Because again, if you're a trader, it's a completely different playbook. Yeah, thanks for listening. Bye.